What's going on, penny boys and gals? It's your boy, What the Duck here, and it's time for another PBU live stream. So, usually these are live streams. However, we had some technical difficulties, just like the stock market. With technology, there are certain things you cannot control. So our stream cut off halfway through. It happens. But we're going to go ahead and re-record some of the parts that we might have missed. We did do 3 $25 cash giveaways. I'll be announcing the winners of that at the end of the stream. We do these streams every Thursday, 9 p.m. Eastern time zone. It's going to be live. We do them on our Facebook at facebook.com/GG. No, I'm sorry, facebook.com/groups/BTpenny. And you can also join our free Discord at pbalerts.com/stocktradinguniversity to get all the information on our live streams. And of course, we also do them on this YouTube channel, so if you like to like and subscribe, it's much appreciated. So, PBU live stream, how do these work? So, if you're new to this, like I was saying, we do our $75 cash giveaway drawing. In order to enter that, you can be a premium member at pbalerts.com. There are many ways to enter on the Discord, and I also give out a little sign-up sheet for all the free members on our Facebook and on our free Discord. But the premium members do have access to the cash giveaway channel where they can get extra raffle tickets. That's just a way of saying thank you to the premium members for being an amazing, amazing community. We also do our homework review during our PBU live streams, as well as we usually do some trivia. However, because this one's not live, we're not going to be doing the live trivia. We'll be doing that at another time. So let's go ahead and get right into it. Oh, and by the way, with every PBU live stream, we also do a bonus indicator or a bonus trading tip. Tonight's bonus indicator/tip is going to be going over the difference between limit orders and stop losses, as well as trailing stop losses. And we'll be going over 2 different indicators that you can use to determine where you want to put your stop loss. And these are charting indicators I'm talking about. So let's go ahead and get right into the homework review. So as I was saying, our first homework is going to be on FinViz. So as you can see, our first class, PBU class number 11 is what we're on right now, is on FinViz, which is a stock scanner or a stock screener. So if you do join our Penny Boys University, you get access to these handouts. And of course, with our FinViz handouts, we give you a bunch of different stock screening settings that you can use in FinViz. So I give you all the different types. If you go to the screener, I give you all the different types of ways that you can use these to find short squeezes, low floats, swing trades, possible day trades, the whole 9 yards. And we have them all listed right here, like low float, basic stock scan, continuation play, and a whole bunch more for the PBU members. We also went over floats. We went over short squeezes. We went over how short ratio works, as well as, like I was saying, short squeeze. We went over dividends. We went over halts, and as well as stock splits, like reverse splits or forward splits. And of course, Webull financials. So these are all things we went over in Penny Boys University. So let's go over the homework. Our homework number 11 for FinViz. What's the first question? Well, the first question is, what is finviz.com? And the answer, of course, is none of the above. It's not a news site only. It's not a stock screener only. It's definitely not a trading broker. It does have a stock screener. It also has news as well. And it, of course, like so if you go into a stock, you can go to the news area and get your news right here. It also has a news section right here. But it also is, like I said, a stock screener. So that's why the answer is none of the above, because it is a stock screener as well as a news site and so much more. What does the groups tab show you? Well, the groups tab shows you, and as you can see in the homework, the answer is how different sectors are doing for the day, week, month. So you have your day, your week, your 1 month, and it shows you how the different sectors are doing: technology, real estate, communication services. The reason this is important is that this way you can see how your stock is doing compared to the rest of the market. So if you have an energy stock, let's say that your energy stocks are going down on the day. You're like, oh, is my energy stock not good? Well, you can look and you can see the energy stocks in general are it's just not doing so well on the day. So you can assume it's not just your stock, it's the whole sector. Or for instance, if you have basic materials, and for the past week, that your stock has not been doing well, and it's in the basic materials sector. Well, you can see that in the past week, the rest of the sector's been doing well. Maybe I have to do a little bit of due diligence on my stock that I'm in. Maybe there's a reason why it's not going up with the sector. Maybe it's not a good stock, or whatever it may be. And that's why we use the groups tab. What does the heat map show you? Well, the heat map, go to maps, it shows you, as you can see, the green and the red shows you stocks that are doing well on the day and not doing so well on the day. And it kind of boxes them into different sectors and industries. Like here you have technology and all the technology stocks. You can see how technology sector in general is doing. It's kind of just like a visually appealing way of just looking to see how the market is doing. And all the sites that we teach you about here in PBU are free sites, which is why I'm getting all these pop-ups. But yeah, we don't go over any sites that are not free, because we want to make it so that people in PBU are able to use what we go over in PBU without paying an arm and a leg for fancy stock screeners or the fancy stock sites. Or we also go over all of our sites that we go over are things that you can use with just your phone. You don't need a laptop or 20 different monitors in order to take advantage of Penny Boys University and what is taught in it. It's for everybody. We're very inclusive, as well as traders who work 9 to 5. We actually have a whole course going over how to trade while working 9 to 5. So if you might think you're too busy for the stock market or too busy for PBU, I promise you, you're not. I mean, you might be. If you're working, every single hour of the day. I get it, but even if you're working like 8 hours a day, 10 hours a day, there is still, if you have time in the day, even like 30 minutes in the day, you'll have enough time to complete PBU. Each class, there's 2 of them per week. They each take maybe around 15 minutes to complete. And we do that because, we also have a handout, which if you want to take more time, you can look at the handouts. It might take you a little bit longer, but the videos are around 15 minutes. And the reason we do that is because we want everyone to be able to be involved. Even if you are working 9 to 5, if you don't have access to paid websites and paid stock screeners, even if you don't have a laptop that you can trade on, we want everyone to be able to trade here in PBU, because we want everyone to be able to get some financial freedom, because we know how difficult it is in the stock market, and also just in the economy in general nowadays. With everything going on, we want to be able to help as many people as possible. And that's why we try not to make it too exclusive to people who have money or have a laptop or have this or that. Anyone can do Penny Boys University and learn the basics to stock trading, so that they can make some bread, and then maybe eventually use their profits to buy a fancy stock screener, or buy a paid FinViz site, or a laptop if they don't have one. I mean, we've had members pay off their cars or pay off their mortgage with the profits they make from our alerts. And whenever we hear that, or even just someone who said hey, I was struggling really hard, I lost a lot of money, it was depressing, and now I'm back in the green, I just feel so much better, it's like a weight lift off my shoulder. That's everything for us here in Penny Boys. Hearing those stories, that's why we do what we do, because there are just so many people getting taken advantage of in the stock market, and our goal is to, well, no, I'm not going to speak for everyone in Penny Boys, but personally, the reason I'm doing this, the goal in my job I give myself here as the Penny Boys University instructor, is to basically just give the finger to all those pump and dump scammers and all those people who want to take advantage of us little people, if you want to call us that. The people who aren't big time investors, don't have a crap ton of money to throw into the stock market. People who don't, who if they get scammed, it's gonna hurt. So our goal is to make sure that we can help the people who got scammed already to make that money back. So they aren't feeling a certain way, because we all know how it feels like to lose money, especially to a pump and dump or something. You hear all this stuff on the internet about the stock's going to go up, it's going to go up, and then it doesn't. You feel betrayed. But in theory, the only people that we can blame are ourselves. But we can learn from our mistakes, and start to realize that you can't trust everyone on the internet. That's why we have Penny Boys, because we are a family, we are a community. I'm not saying blindly trust us either. We have the free area, the free Discord with free alerts and free education, like these free live streams. So definitely you can check us out and see what we're about before putting money into a premium membership, or before just blindly trusting us, because I don't want you to just blindly trust us. I want you to, if you're going to be putting money into anything, I want you to be careful about it. including penny boys, premium stocks. So alert service. So definitely check out the free Discord if you aren't already in it, just to see what we're all about. But we do take pride. We don't have to sell anything to you. Our community sells itself. Just if you just talk to some of our premium members, you'll start to realize like, oh, this is legit. And it's not for everyone. I really do try to make it for everyone. Like I was saying, if you work 9 to 5, if you're busy throughout the day, if you don't have a lot of you don't have the money to put into a laptop or this or that or whatever, we try to make it for everybody. But like I said, if it's not for you, that's okay. But if you do plan on continuing to trade, I really suggest finding, if not us, then a different service that can stock service that can give you the education that you're going to need in order to be successful in the stock market. Because no one can just jump into the stock market. No matter how smart you think you are, if you don't know how the stock market works, you're most likely going to lose money. And even if you do make money, luckily, by gambling or just by being lucky, luck runs out and you're going to end up probably losing money in the long run. It happens to a lot of us. We make 2 or 3 lucky trades. We're like, oh my God, this is so easy. You start to feel unbeatable. And then you throw more money into the stock market and you realize that you just got lucky 3 times. And the next 10 times you don't get lucky and you lose money. So that is that tangent. So if you don't know what a certain stock term means in FinViz, what is the best thing to do? And the answer is hover your mouse over the term and FinViz will give you an explanation. Then if you still don't get it, go to Investopedia.com, and that is not FinViz. So what I mean by that is you don't know what a certain term means. Well, exchange is a pretty relative volume. You don't know what that means. You can just put your cursor over it right like that, and it shows you this ratio between the current volume and 3-month average, intraday adjusted. Or you can go to float. Float is the number of stock shares that are available for trading to the public. This doesn't include shares held by insiders. So if you don't know what these means, you can just put your mouse over it, or you can go to Investopedia.com. And if you don't know what that is, you can check out our Investopedia.com trading class. We went over a bunch of different online websites like Investopedia.com, Investing.com, and TradingView that you can use. They're all free to help your trading. Or, of course, you can take our PBU classes. We go over what a float is. A float is refers to the amount of common shares a company has issued to the public that are able to be traded by investors. We go over all this good stuff as well, in PBU. So, whatever works, just as long as you're learning, that's really all that matters. FinViz will show you stocks that have earnings, aftermarket only, aftermarket close only, before market open only, and it's actually both. So what I mean by that is you go to the home page, and by the way, if you don't know what top gainers mean, or overbought, or any of these things, it also tells you. Like even like a, any of this stuff, like it'll tell you like what it all means. So right here, aftermarket close earnings, before market open earnings. So that's what I meant by that. So FinViz is a great site. They have the earnings and all that kind of stuff. This is a great site to use to get all your basic stock needs. Homework number 12, we went over floats, dividends, halts, and financials. So what is a float? Like I was just saying before, a float in trading refers to the amount of common shares a company has issued to the public that are able to be traded by investors. If stock XYZ has 15 million total shares, but 5 million of those shares were restricted shares, the float would be, and if you went to the homework, you would be able to see how do you find the float. Well, you can find the float by taking the company's outstanding shares and then subtracting it by the restricted shares. So if you have 15 million total shares, 5 million are restricted. 15 minus 5 is 10 million. What does the float tell us? And the answer is how much sway the insiders have on the stock movement. And if you didn't know that, well, why is it important? The float shows us how many shares are actually available for trading by the general public. And through that, you can kind of see that, what different investors or what different insiders are doing as far as what stocks that they're investing in, because insiders might know a little bit more than we do. The greater the float, the more likely there will be high volatility, and that is false, because if you know through the homework, float does affect how volatile a stock may be, but the greater the float, the less likely there will be high volatility. And this is because the greater number of shares available to trade, the less volatility the stock will experience due to it being harder for a smaller number of shares to move the price. So there's not, if there's not as many shares available for trading, it's easier to move the price. Whereas if there's a lot of shares available for trading, a small buy, like a shark or, a whale as they call them, or some millionaire investor, pumping some stock, if there's a lot of shares available, it's not going to really make that big of a difference. If there's only a few, it could make a difference. So that's why the greater the float, the less likely there will be high volatility. Homework number 12. So if a stock is reaching a high short percentage, 40, or so I said around 20 to 40%, it might be a good idea to research the stock and why, and that's because the insiders might know something that we do not, and it might go down soon. So, the stock's going up, but then there's a high short percentage, meaning a lot of the insiders are shorting the stock, meaning they're betting against it. There's usually a reason why the insiders are doing that. They find out stuff usually before we do, so you might want to think, if they're doing it, maybe I should see why. And this kind of happened, the short squeeze. So actually, I'll just do this. A short squeeze can happen if the price of a stock with a high short interest begins to have a strong upward trend. Why? So it's to cut their losses. Short sellers may buy shares to cover their short position. So, as you know, with the shorts, where's it? Short squeeze. Here we go. A short squeeze can happen if the price of a stock with a high short interest begins to have a strong upward trend. And what this means basically is shorts. We went over this last stream, but short sellers are people who borrow a share so they can sell it. So let's say I borrowed a share, at $8, and I immediately sell it at $8. So now I have $8 in my hands. So I'm up $8, but I borrowed that stock. It's not my stock to sell, so I need to give it back eventually. I already sold it, so I got my $8. So now, ideally, the stock's going to go down to $6, let's just say, and now I'll buy the stock for $6, and I will give it back to the borrower. So I still have that $8, in my hands. All right, so I bought the stock for $6. I still have $2 profit. So the stock went down, but I made profit because I borrowed it for higher than it was when I gave the stock back or bought the stock back. But when a short squeeze happens, let's say I buy the stock at $8, or I'm sorry, let's just say I borrow the stock at $8 and immediately sell it, which is what shorting is. But then the stock goes up to like $20, I'm screwed because I still have to give that stock back to the person I borrowed it from. I don't have it, so I have to go buy it for $20, even though I just borrowed it and sold it for $8. So now I'm at a $12 loss per share. And that's kind of what happened with the GameStop and AMC, is we had all these shorts who borrowed and sold these shares, or hoping it would go down and they could rebuy these shares for a small amount. But what happened was the stock skyrocketed and they got nervous and they started buying back their shares to give back to the borrowers, and then buying back the shares also helped the stock go up, and that is a short squeeze. A blank is a distribution of profits by a company to its shareholders. Fill in the blank, and it's actually none of the above. That is a dividend. A dividend is a distribution of profits by a company to its shareholders, as you can tell from our handout. A dividend is a distribution of profits by a company to its shareholders. It's right there, first line. I'm not trying to trick you out with the homework. Everything is in the handouts. So basically, when a company earns profits, they're able to pay part of it as a dividend to shareholders like us, and any amount not distributed to the shareholders is then reinvested into the company, and that's called retained earnings. And the current year's profit and the retained earnings from prior years are available for distribution, or available as a dividend, but the company is not usually allowed to pay a dividend out of its capital, out of its pocket, basically. So also make sure that you are aware of this, that the money received from a dividend is looked upon as income and can be taxed. So research dividend tax if you have dividends, because it's a little different from normal taxes, and it really depends on where you live, which is why I'm not going to go over that in detail, because we have people from all over the world here in Penny Boys University. Speaking of which, in the US, what is the most common dividend payment timings? And that's quarterly. So as you can see with timing, the most relevant dividend payments are quarterly in the US, semi-annually in Japan and Australia, and annually in Germany, however they can vary. So what can cause a trading halt? And it's actually all the above, which is a technical glitch, a sudden price drop, or news. So if you go to our halt area, you can see that, first of all, a trading halt is when a stock is temporarily suspended for trading. It usually happens in anticipation of a news announcement. So basically, the companies are obligated to let the market know about, news that is coming out, news announcements. And if the market deems that news to be really, something that's going to really move the stock to a point where, like really, really move the stock, then they might halt the stock before the news comes out, then let the news come out first, let all the investors hear about the news, and then resume trading so that everyone gets a fair shot. Also, if a stock, like I was saying in this handout, or in the homework, if a stock has a sudden price drop or even increase, it might halt just to make it fair to traders who are in the stock or who want to get into the stock. People who are currently looking at the stock, they might get lucky, but if they didn't have a halt, but because it halts, it kind of gives everyone a chance to kind of react. It's kind of like pausing a video game. Let's just say something crazy is happening in the video game. You're like, oh crap, let me pause and let me think about this. That's kind of how that works in a sense. That wasn't the best analogy, but it's similar to that. It's basically just saying, hey, everyone, it's kind of like here's a better example. And I was trying to stay away from sports analogies, but in football, a play happens and, everyone's not quite sure exactly, if it was a catch or if it was out of bounds or whatever. They call a timeout or whatever, or not even timeout. They just halt the play, and they call for a review. And basically, what that's doing is everyone's saying, stop. All right, everyone, let's look at the play. That's kind of how this works in a sense. So if a stock halts due to a sudden drop in price, this is known as a circuit breaker or a curb, which is both, all the above. A stock split, both. So if you ever hear these terms, circuit breaker, curbs, it's referring to a stock halt. A stock split, both reverse or forward, is when a stock divides its shares. And that is false, actually, because stock split, reverse split, is when a stock divides their shares. But a traditional split, or a forward stock split, like Apple and Tesla did recently, is when they multiply their shares. So if you had 10 shares of a $30 stock, total $300, and had a 3-for-1 split, you will now own, and basically 3-for-1, so every 3 shares you have, it's now 1. So now you have 30 shares. I'm sorry, 3-for-1 split. So now for every 1 share you have is now 3. So you multiply 10 by 3, you multiply, so you have $300 right here. So it's the same deal. You divide this by 3. You have 30 shares of a $10 stock. So instead of 10 shares of a $30 stock, now it's 30 shares of a $10 stock. 30 times 10 is still 300. 10 times 30 is still 300. The reason they do that, usually it'll be like a $3,000 stock turned into like a $300 stock or something like that. But the reason they do that is right here. So why do splits happen? So companies are trying to make their stock price more trader friendly. Companies are trying to get over the $1 range, and companies want more outstanding shares. So what does that mean? Here we go. So why do stock splits happen? Well, like the handout says, most stock traders feel more comfortable buying 100 shares of a $10 stock for $1,000 than they do 10 shares of a $100 stock for $1,000 total. Either way, you're still spending $1,000. However, it just looks more user friendly when you see a stock that's $10. You're like, oh, I can put $1,000 into that. Whereas if you see a stock that's $100, it's like, oh, I can't buy enough shares of that. It's not worth it, even though you're still doing the same thing. The reason the companies do that is for instance, Apple and Tesla. Us retail traders, Robinhood traders or whatever you want to call us. We might see Tesla at $7,000, $1,000, whatever it may be, like $1,700, and we might think, oh, that's too high at $1,700. I'm not going to get into that. But then they do a forward split. Stock's still worth the same, but now instead of being at $700 because they do that forward split where they multiply their shares, now as like right now, like Tesla's like $300 or $400 or $500, where now we want to be more us retail traders might actually be more obligated to, not obligated, but might be more willing to buy the stock now that it's only $300 instead of being $1,700, even though it's technically worth the same. So that's making it more user friendly, also, or trader friendly. Also, companies might try to get over the $1 range. That being, a penny stock, for instance, might try to go over $1, because in order to be NASDAQ compliant, you need to be over $1 for a certain amount of time. So they might do a reverse split to turn their 50-cent stock into like a $3 stock, but it's still worth the same thing. You just get less shares or more shares depending on what the split is. So it's kind of like, instead of having one big cookie that's worth $5, you get 5 little cookies. That's the same cookie. It's the same big cookie split up into 5 cookies, but they're each $1. You're like, ooh, I can get 5 of those for, I can get 5 cookies for $1 each. Like, oh, that's not bad. Here's $5. You see one cookie for $5. You're like, that's kind of pricey for one cookie. I'm not going to spend $5 on one cookie. Even though you're getting the same amount of cookies, you're more willing to spend $5 on 5, $1 little cookies as opposed to spending $5 on one big cookie. Just because this is how our brain, kind of going back to the trading psychology, this is kind of how our brain works. We want more. So 5 is more than 1, even though it's the same thing. Like, humans are crazy. We're all crazy. That's why I'm what the duck and not what the human. No, I'm just kidding. I'm a human just like everyone else, and I have emotions, trading emotions just like everyone else, and I make mistakes just like everybody else, including the best of traders. There's no such thing as a trader who does not make mistakes. This is impossible. There's no such thing as a basketball player who doesn't miss a shot. There's no such thing, LeBron James, he misses shots. Tom Brady misses a pass every so often. Not so often, not very often, especially in the Super Bowl, but for those of you who are watching that Brady-Gronk connection against the Chiefs, hopefully some of y'all made some bread betting on that. All that being said, I'm not trying to say gambling is a good thing. Actually, gambling is a terrible thing when it comes to the stock market, but, if you like to go out, put some money in the William Hill Sportsbook or sports betting or, whatever, that's up to you. Like, I'm not going to tell you how to spend your money outside the stock market. But in the stock market, we definitely do not gamble. We trade based off of a plan. Anyone can gamble in the stock market. Anyone can just throw, $1,000 into the random XYZ stock that everyone's talking about. That's easy. And if stock trading was easy, then everyone would be making money. You wouldn't see that when 90% of traders quit. It's hard, and 90% of traders quit because it is hard, and they think it's easy because they go on YouTube and they see all these people saying, oh my God, you follow me and you can make $100 a day. You follow me, do exactly as I do. I took my account from $3,000 to $3 million. Do what I do, and da-da-da-da-da-da. And it's all bullcrap. That's not how trading works. You can't just follow the leader and just follow somebody else. Like, unless you are literally their roommate and literally sitting right next to them on the computer and doing exactly what they say. Like, they're telling you what to do. They're right there for you. Like, unless you're literally awake whenever they're awake, sitting next to them the whole time, there's a good chance that you trying to follow somebody and try to do exactly what they do, you're going to end up losing money. Like I said, unless you're literally looking over their shoulder 24/7, which is unreasonable. No YouTuber or no stock trader or stock teacher is going to be doing that. That's why in Penny Boys University, what we gear this course towards is, well, first we do our Discord overview, obviously. That way you can kind of just know how our Discord works, but, because you want to be able to know how to read the alerts and how that all works before getting into the alerts. But that's why, our first courses are on trading psychology. That way you can kind of determine what kind of trader you are emotionally, which is going to be different than me. So don't do what I do. Like, and I if you're in PBU, you already know this, but I don't want you to try to copy me. I don't want you to try to copy our Big Quench, one of our main alerters. I don't want you to try to copy Mr. Stocklot Provis. They're amazing traders. They're two of the best traders I know, but I don't want you to try to do exactly what they do, because you're going to probably lose money because you are not them. You're not the same person. You don't have the same schedule. There's just so many different variables that it's impossible to do exactly what they do. So anyone who tries to tell you, follow exactly what I do and you'll make money, it's most likely a scam. They might mean well. Well, no, usually they don't. Usually they're just trying to, they give you all these, like, look at all these profits I have and, pay me money. But, sometimes they do mean well, but they just don't know that this is not how stock market works. This is, I can show you, what I do, but doesn't mean that that's going to work for you. If I was a basketball player, I can, show somebody how to shoot a basketball. I can show someone how I play basketball. But maybe they play differently than I do. Maybe I'm a point guard and they're a center. Maybe as football, I can show someone how to play football. Maybe they're a wide receiver and I'm a QB. So they can't do exactly what I do, and I can't do exactly what they do either, because we're different people. So that being said, in PBU, we kind of give you the basis. Here is how to become your own trader. Here's the trading psychology, so you can learn to learn your own personality. Learn how that might affect your trading. And then learn how to identify and manage your emotions. And then we go over trading strategies. That is a little bit less geared towards individual. That's trading strategies. We kind of go over finviz.com and Investopedia, investing.com, TradingView, other sites like that. But even that, everyone uses it differently. Even like with our stock scans that I do, we go over. I tell everyone, what a scan that might work for me might not work for you because of the way that we play the certain stock. So even with those things, everyone does it differently. And then of course we go over our trading plans with our risk to reward ratio, our making a risk-based trading plan. That is our next month in PBU, and the reason we do that is so that you can learn to make your own trading plan. I give you an example. It's more of a template even, and then you go and make your own plan. I'm not saying, hey, here's my plan, use it because I'm making money doing it. That's not going to work. It's not going to work for you. It's not that easy. Stock trading is not easy. I cannot stress that enough. It's hard, but if done right, there is it's a very great way of making some money. But when I say done right, I mean done right for you. I'm not doing it right. Just because I'm doing it a certain way doesn't mean it's the right way. It's my way, and it might be right, or might be working for me, but that doesn't make it right. So PBU is all about becoming your own trader. That's why we do these FinViz classes, so you can learn how to find your own stocks. That's why we do the charting classes, charting month, so you can use the charts to not only find your own stocks, but then kind of figure out what a good entry price is and what a good target is. So you can become your own trader. These alerts are freaking amazing, and these guys are doing the not even FinViz. They're using their own sites, and they're using their own scanners they made, and they're using technical and fundamental analysis that's way advanced. So obviously the alerts are going to be a little more successful than a play that I might take or a play that you might take as a beginner, which is okay because we're beginners. Someone riding a bike for their second, fourth, fifth, even 100th time is not going to be as good as someone who's been riding their whole life. This is how it is. It takes time, but eventually, we will get there. But yeah, so that's why we want you to become your own trader, because that is how you can learn to make money in the stock market, is by trading based off of your own plan, taking notes, and kind of seeing what works and what doesn't work for you. So I'm going to stop lecturing about that. I keep going on tangents during these, because it's not a live stream. I have people like in the chat. I can just keep going, blah, 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 blah. So sorry about that. Hopefully it's some stuff that, some of y'all needed to hear. Honestly, there's just one person that benefits from this. That's a win in my book. Even this one person is going from losing money to making money. That makes me happy. Ideally, everyone in PBU will end up that way, but every person counts. So that is actually that. So that is the homework number 12. So next up, so first of all the people who got 100% of the homework, congratulations. Ross Tyler, Money, R Steels, MKO, K Scott, Takak, G Bits, Davis, Red, Dennis, Kalian, Sukiro, Spuddy, Toy Tacoma. I am so sorry I'm botching all these names. That, to be fair though, most of this isn't even, these are just letters. Toy Tacoma, Hiroshi, Cashman, Scott, Trader Al, Caladron, CTRJXN, Cam Bowen, Harvey, Frank Burton, Tlordy, Dwight, Neo, Bermac, Pennies Equals Dollars, Loner, Wick, Bass, Die Jimmy, Lava XDC, Buck Wild, Doughboy, Jen, Dizzy Dene, who is our Penny Boys Student of the Month for January. Just keep getting those hundreds and keep answering the questions, keep being a positive influence in chat, and just especially for the Penny Boys Student of the Month, it's a lot about is just the willingness to learn. That's the most important thing here in Penny Boys, is just the willingness to learn. Y'all took the first step just by joining this. Y'all the minority. The majority of the people are the ones who don't want to learn. The majority of the people are the ones who want to just throw money into the stock market and get rich quick. Y'all are the minority, and that's a good thing that we're in the minority, because the minority are the ones who make the money in this case, because we're the ones who are trading with a plan, who want to learn, and we're taking time and investing not just our money, but we're investing our time into ourselves, and that's how you make money in the stock market. It's not easy. It takes time, and it takes patience, it takes learning, just like anything in life. So Barbie Girl 28, Mickey Smallson, Jeffrey, congratulations. Homework number 12, Pookie's Revenge, one of our PBU guides. Voice of Brad, Takak, G Bits, Davis, Dave B, Caladron, Maku, Twilordy, that was just a sound, MKO, Twilordy, Dennis M, Spuddy, CTR Jixon, Toy Tacoma, Trader Al, Basti, Die Jimmy, Cashman, Reddit PMC, Buck Wild, Dizzy Dene, once again, definitely making sure that she is staying, representing that PBU student of the month, getting 2 100s. Good job, Dizzy. Get some great. Well, I just get some GR. I don't know why. Barbie Girl 28. So congratulations to all of y'all. Y'all do not make it easy with me with these names. You can't just be like Stock Trader 101 or like Buy the Dip 007. I don't know. Anyway, these are our questions that we do in PBU. So in the homework we also have we have all these multiple choice questions. You get 100 in the homework, like these people up here. You get raffle tickets for our weekly drawing, cash drawing. We also have a question that is not fill in the blank, where you can answer with your own words, and we give out raffle tickets to those who answer with some of the top answers. So G Bits was one of them, and the question is: use any of the search criteria that I gave you in the handout and search for a stock. What was it that you were looking for using that criteria? What did you find? Did you like what you found? Why or why not? So they said I was using these settings to look for a possible swing play. And actually, before I do all this, I just want to double check to make sure. Yes, we are still rolling. Good. All right. So I was using settings to look for a possible swing play. I use the settings in the handout. So like I was saying, we do have the swing play settings and all the other different types of settings in our handouts. So definitely be sure to join PBU if you haven't already. If you don't know how to trade, you're new to trading, you've been losing money on your own, you've been following the wrong people, please, 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 at the very least, just check us out. I promise you will not be disappointed. But it's up to you. I don't want to tell you what to do with your money. I use the settings in the handout. I was able to narrow down to only one stock, and it is FLGT. I looked at let's look at FLGT just to see what they found. So it looks like, oh yeah, there we go. Yeah, so it looks like I had that little spike. And then since the homework, it did take a little bit of a dip, but it actually held up pretty well. It's currently overbought. But yeah, so let's see what happened. I looked at the website first and saw that they are big into COVID testing. They got recent FDA approval for at-home testing. Looking at the chart, they went big over 2020 into 2021. And in January to February this year, they skyrocketed. As you can see, January, February, boom. I am still learning about charts, indicators, and such, but this does look like a stock I can keep an eye on for any dips, which is what happened. So really good that you didn't go right in as soon as you found it. You were waiting for dips. You put it on your watch list. That's a really important thing. These aren't just stocks that we're trying to go all in on really quick. These are ones we're putting on our watch list to watch. Looking at the chart, they went big, and I am still learning about charts. I already said that. I imagine with COVID still going on and testing being a big thing, that they will stay up. But if I can learn how to analyze a chart, maybe someday soon here, I can watch for indicators, dips, and potential buy-ins for a swing trade. I like what I found. I don't know if I would ever use it, but I will probably add it to my watch list and see what happens, just to recognize if my analysis is accurate in any way, and that is so important. It's just to I personally, I've been doing exactly that. I've been I've been kind of tracking my trades that I found using these exact stock scans that I don't have it up anymore, but the same stock scans that I went over in PBU. These are the exact ones to a T that I use. And I didn't get into all these plays, but I tracked them all to see how my scans are doing, so I know which ones work, which ones don't. Low float scan, I got a 350% gainer. I got a 144% gainer, 91%, 62%, 50%, 34, 33, 26. And then some small ones at like 15 and 9. ELYS went up to 5%, and then it went all the way down to a 10%, my 10% stop out area. And then CPSH also stopped out. So these two, weren't that great. But besides that, these, I would take these wins and be okay with two little losses at 10% stop out. Getting a 350% gainer, 100%, a couple, 1, 2, 3, 4, 5 over 50%. So low float scan for now seemed like it was working pretty well. Bounce play scan. I got a 50% one, a 10% one, and one that, and this is all just the month of January. I haven't updated it since the end of January, but and the ABUS is technically, it hasn't gone up to the target and hasn't gone down to the stop loss, so it's kind of sitting there. Bounce play seemed to do okay. 2 out of 3, not bad. One being 50%, not bad. Low float possible breakout did not do so well. Still in, so it didn't go to target, didn't go to stop loss, and MKGI did stop out. So not the greatest one yet. So, but it was only 2 plays. Even just like with your plan, I always preach, don't jump the gun when it comes to adjusting your trading plan. If you have a trading plan, you lose 2 trades. It does not mean that your plan does not work. It just means that you lost 2 trades. For all you know, these 2 trades might not have worked out. But for all I know, the next 10 low float possible breakout scans might. So it takes, I personally don't even touch my plan. I don't change my plan at all until I'm 20 trades in at the very least. Usually I wait till I'm 30 trades in, and then I analyze my trading plan. Now that I have the statistics behind it, because I had all those trades, now I can analyze my trading plan based off all those trades and how they did, what they were, how they worked, and then I can adjust my plan accordingly, keep what worked and try to fix or adjust what didn't. Short squeeze scan, so far so good. 249% for one, 62% for another. A couple of these did come, like ATOS was an alert. A couple of these, I think it was actually only ATOS and HCDI were the only 2 that I found before I realized it was an alert. I found a bunch of other ones that were alerts that I already knew were alerts. So I didn't put them on there. I don't count those. But ATOS and ACDI I did find on my own with these scans without even realizing they were an alert. This one, went up 12%. Not terrible. It's definitely hits my take profit plan. Swing scan did okay. All 4 over 10%. One almost at 100%. Basic scan did all right, 80%, which actually is not bad. And 52% is pretty good as well. So, out of all the scans that we taught here in PBU, I had 2 stopped out. I had 1 hit 5% and then stop out, and then 2 haven't really done much yet. And the rest all hit almost at least 10%, if not more. A lot of them went over 50%. So, definitely, it's worth, like Jeepit says, putting these on your watch list to see what does work, what doesn't work. Because now I know maybe to look for, my low float scan might be the ones I play best. Whatever it may be. Dennis M says, I used the breakout stock search and I was looking for a stock that was about to break above its previous high or resistance. The results provided 2 stocks. One of them was out of my price range for trading. The other looked like it broke resistance with good volume, but the stock is showing a high short float above 20%, which makes me think that the stock is not going to maintain its high and probably fall back down. There's nothing wrong with that. Another emotions. All these classes as we go on, I'm going to probably be referencing these trading emotions, the trading psychology classes, because it is such a big part of trading. But one emotion of trading is overconfidence or just boredom. You might be searching for stocks, and like Dennis M, they found 2 stocks, didn't really like either of them. Well, if you're trading based on your plan, you're just, you're not going to bother with them. You're going to wait for another stock, because there are 7,000 stocks in the stock market, and just in the screener right here, 7,720. There's always going to be another stock that you can get into. There's 7,000 stocks. We're not short on stocks. So, definitely it's okay to wait for one that really fits your plan to come up. You want to be picky, very, very picky as a trader. I personally have a criteria of, and we'll go over this during the trading plan class, but I have a criteria of 5 different things that I like for my stocks that I get into. And if a stock that, alert, or a stock that I find does not fill all 5 of those, does not check all 5 of those boxes, then I don't care. I'm not getting into that stock. Even if it checks out 4 boxes, even if I think it's the greatest play in the world, if it does not check my 5 boxes, then I am not getting into it, because I am a picky trader and I only trade stocks that I really like, because it's my money and I don't want to lose it, and I want to be smart with it, and I'm going to use it in a way that follows my plan. I'm not going to go out to the store if I'm looking for, a red shirt. I really need a red V-neck, a maroon V-neck, let's just say. I guess I really want one of those. That's all I really want. I'm not going to go to the store and just, find like a blue V-neck that's all right and be like, I guess I'll just take this. It's close enough. Or, find like a red shirt that's not a V-neck, that's like bright red, and it's close enough. No, I don't want that. I want a red V-neck. I want a red V-neck that's maroon. And so I'm going to go to a different store, and I'm going to keep, I'm going to wait, because there's other stores, I'm talking about, online stores. It's not like you're, driving all over the place. I'm just going to go to a different online store and just try to find one there, because there's other stores out there. There's other shirts out there. There's other stocks out there. Be picky. Don't just pick something that you don't really want. And also, don't trade because you're bored. You find these 2 stocks, you don't like them, but you're like, well, I didn't take any stocks today. Well, maybe I'll get into one of these. I'm bored. I want to trade. That's not how you make money. You don't just trade because you're trading. That's not trading based on your plan. That's trading based off an emotion. Emotion being boredom. You wouldn't do that in life. You wouldn't. You know how when you're hungry, you eat. You eat to. If you're on a diet, let's just say. It's one thing if you don't care about what you eat, but if you care about what you eat, you're really trying to right now. Like I'm in. Big into fitness and all that. Like I'm not going to eat just to eat. I'm not just going to eat because I'm bored. I eat for fuel. I eat because I want to get the proteins. I want to get my macros. I want to get my whatever it may be. I eat for a reason. I'm not just going to get like a lot of people do. You're just bored. You're like, oh, I'm just gonna open the cupboard and open the fridge and see what's in there. No, if you're on a diet, well, you're not going to do that. You're only going to eat when you want. When it makes sense to you and when it's on your when it's part of your diet. You're not going to eat because you're bored. Same thing goes for stock trading, because if you eat when you're bored, you get fat, and when you trade when you're bored, your portfolio gets skinny. So that is that. Sukihiro. I just wanted to search for high volume stocks to play around with a bit while I'm still learning what all these terms and such mean. It is simple to use and seems to narrow down selections pretty well. I like it a lot because one of my biggest things, or I like FinViz a lot, or the class a lot, because one of the biggest things when I see these alerts and such in the Discord is, I think to myself, how are people finding these opportunities? Like, how are people finding these stocks? Well, I honestly have been worrying if I'd ever have the time needed to discover my own plays, so this FinViz class is great. And like I said, that's why we do this, because a lot of people do wonder, how do people, like, I don't want you guys to think that, like, like Big Quench and, Mr. Stocklock Profits are like some gods. No, there's people who are using these, not this exact scanner, but scanners just like these to find these stocks. They're not like going into the, I don't know, stock trading black web or whatever. Like, these are all things that, we could in theory do with enough time and practice, So the whole thing about PBU is just letting y'all realize that this is possible and you can do it. You can be an amazing trader. It's just going to take a little bit of time and a little bit of effort and some learning, but with PBU, hopefully you will be an amazing trader soon. And I don't want you to think that anything is impossible. It might be hard, and might be there. You might not be there yet, but it's not impossible. So like Sukihiro realized, like, oh, I didn't think I would ever be able to discover how to find my own plays. Well, now you do. Now you know how to. It's not it's not impossible. That's why we do this in PBU, because there's too many traders who quit because they think it's impossible. They think it's too hard. They think they're a bad trader, when in reality they're not a bad trader. They just haven't been taught how to become a good trader. Anyone, if you have a ski instructor who doesn't teach you how to pizza, for those of you who don't ski, don't teach you how to brake, basically. If you have a ski instructor that says, all right, you just go down the hill, you're probably going to hurt yourself. The same thing goes in the stock market. If you're only following these pumping up plays on Facebook, you're only following Facebook comments from random people who do not give a duck about your portfolio or you in general. They don't care about your mortgage, or that you have a family, or that you have a car that you're paying off. They don't care about that. The stock market doesn't care, and neither do these people who are pumping these stocks. I personally do care, and I don't, you can believe me or not. Anyone can just say that, but no, I genuinely do care. And obviously, there's a lot of the members in here who I talk to personally, but even those I don't, if you're struggling, or even if you're not, I care about you. I don't want you to lose money. Like, why would anyone want someone to lose money? I want the opposite. I want y'all to make money, because with me personally, that's just how I am with just in general, being progressive and all that kind of stuff. Is I'm a very big believer that the little us little people. I don't want to get too much into this, but us little people have been taken advantage of, and I think that this is our opportunity to kind of fight back in the stock market, or just in just one area of life, being the stock market. But so like I said, I'll do whatever I can to help y'all make money, and to help y'all, as long as you guys are willing to learn. I'm not gonna, if you just come up to me like, hey, give me a stock that's gonna make me $1 million, I'm gonna tell you, I can give you a plan. I can maybe help you out with some analysis for a stock if you want, but ideally I'd rather teach you how to do that yourself Like, I don't want to do these things. I don't mind doing these things for you, obviously, but my goal is to make it so I don't have to. I want to make it so you can do these things. And maybe ask me, hey, is this correct? Like, I learned this stuff in PBU. Is this correct? And I'll be, oh, yeah, yes or no. That's totally fine. But the goal here is to make it so that you guys are asking, hey, is this correct? Or, as opposed to, how do I do, or how do I make this much money? Or how do I don't want to teach you how to make money. I want to teach y'all how to trade so that you can make your own money. So anyway, that tangent is now over too. Okay, so what do you already know about reading financials for stocks, and what did you learn? Takak says, I only knew about dividends. I learned about floats, squeezes, halts, EPS, ROE, shareholder EQ, ROA, BVPS, if low, and the stock price is undervalued. CFPS, net income, total revenue, and operating income, and all their formulas too. Lots of good info in one class. Of course, they're talking about the floats, squeeze, halts class, and the financials. All this stuff here is financials. If you don't know what any of this stuff means, it might look like what's EPS, ROE, EQ, ROA, but sound like a different language to you, or just a bunch of random letters. It's like, that's not how you do ABCs. What the heck is EPS, ROE? Well, join PBU, or go on investopedia.com and look these up. They're on the screen. Take a screenshot. I don't care. Like, I'm not, you don't have to join PBU. This is another way of, you can just learn on your own if you want to. I definitely recommend PBU because you have a group of traders who are there to help you and answer your questions. But to each their own. Look these up on investopedia.com. Teach. You can learn yourself or join PBU, and we do have a class which goes over all of these in detail. But yeah, I mean, even just those people in PBU, it is really important to, do your own research as well. And, you don't want to only be, there's a fine line, I guess, with what I'm about to say. You don't want to only be taking advice from one person because you're kind of putting blinders on. But at the same time, B, you don't want to be taking advice from too many people because then you might get confused. Because like I said in trading, what may work for me might not work for, what may work for me might not work for somebody else, and what works for them might not work for me. And so, that being said, like, so for instance, in fighting, if you're boxing, you're in MMA, you have your coach, and your coach is the one telling you this is how, do this, do that, do this, do that, because, they're a coach and they know what they're doing, they have experience, and they've been doing this, and they took all the hits before, and, they learned the hard way already, and they're trying to, kind of fast forward you through that, which is kind of what we're doing here in PBU. Because trust me, I lost a lot of money when I started in the stock market. I chased a lot of dumb stocks because I was listening to a lot of dumb people, smart people, who were giving me bad advice. Not even dumb advice, just bad advice. And most likely it was on purpose, but that's just how people are. I was getting into all these random penny stocks, because it's gonna go to the moon. I'm gonna hold and hold and hold because I thought that's what I was supposed to do because that's what I was told. Everyone's saying that on Facebook, hold. But so I'm trying, me personally, I want to try to get as many people through that time that I went through, with as painlessly as possible without losing the amount of money as possible. Or for those of you who already went through that like me, then you can do what I did and learn and through PBU, and that's kind of why I created PBU, basically just like the whole syllabus and all these classes, all these classes, like all these like handouts and stuff. This isn't like I don't copy and paste these things. Like, I literally am writing these. Like, everything here is written like by me, my own words. Like, so and this is stuff that I learned through the hard way. So, and I'm not the only person that knows this stuff. There are other people, but like I was saying, with a fighter, and like a fighter, you have a coach, and that coach has their own set of ways, and it works for them. And of course, you want to find the coach that works best for you. Like, maybe, like I said before, maybe PBU isn't for you. Maybe the way that I teach is just not for you. I hope it is, and if it's not, I would love for you to say why, so that I can adjust it and try to help. But not everything. Not everything's not for everyone. So, or some things are just not for everyone. And so obviously, I'd rather you, if you're not going to be here in Penny Boys University, I'd rather you go somewhere else that does teach you how to trade stocks. Because I don't care where you're learning, I just want you all to learn how to not lose money to those pumping numbers. Because I hate them. I hate those people. So whichever way you can learn it, please just learn how to trade. But like I was saying before, with the fighter, you have your coach, right? So I have my coach. This other guy might have his own coach. But one thing my coach said to me once was, just in general, I think it wasn't to me, it was to somebody else, but he basically was like getting mad at this other coach for kind of taking his fighter and trying to teach him to do this or to do that. It was kind of contradicting what the one coach was saying. And what my coach said basically was, hey, look, I understand that what you're saying might be correct. I'm not saying that what you're telling him is wrong, but this is the way that I do it, and this is the way that my fighter is comfortable doing it. And I don't want you to confuse him or contradict what I'm saying, because then he's going to start to doubt himself, and that's when he's going to get into trouble. The same thing goes with trading. Just because I might say one thing and it might be working for you. I can tell you this is how I use this indicator. This happened to me. This happened to me personally. Like, I watched one YouTube video and I was like, oh, cool. This is about the indicator. This is how this person uses it. I'm like, oh, all right, neat. Now I understand this. And then I go to a different video and they tell you the exact opposite thing. Like, don't do this. Do this instead. So, well, now I'm like, well, it was working, but now I don't know. Like, is the thing that I was doing right? And this person's saying one thing, this person's saying another. But guess what? Both these people are making money. Both those coaches in the gym, in the MMA gym, they're both really good at fighting. They both are great at coaching too. But they're two different coaches, and they have two different strategies, and they have two different mindsets, and they're just two different people. So they teach two different ways. And it's nice to learn a bunch of different things. At the same time, you don't want to learn too much or take in too many different areas of advice on the same topic, because then you might end up hearing one thing that contradicts something that you thought was working for you, and now you start to get your confidence starts to waver, and then you start trading emotionally instead of based off your plan, because you're not confident in your plan anymore because you thought that your plan was working, but then this one person said, oh, now it's not, don't trade this way. So there's, like I said, there's a really fine line between too much and then too little. And I'm not saying only listen to me. There's definitely Fast Eddie, Big Quince, Mr. Chocolate Province. There's even people on YouTube outside of Penny Boys that are great to listen to. But that being said, take what everyone says with a grain of salt and realize that they're all different traders. And just because one person, at the very least, just realize that just because one person is saying something does not mean that it's fact. It might be fact for them and it might work for them, but it might not work for you. So just because someone's saying they're doing something wrong, it doesn't mean that you're doing something wrong. Just because they're doing something different than you doesn't mean that you're doing it wrong. In the stock market, or just in life in general, but this is a stock class, not a life class. So, like I was saying, Caladron says, I really didn't. Wait, are we on Caladron? Yeah. I really didn't know anything prior. I think one of the biggest distinctions I have drawn currently is that you need to compare the company you are looking into to other stocks in that sector in order to really judge how said company is doing. And that is 100% correct, especially with the financials that we went over in PBU this week. A lot of those financials you can't just determine, like, oh, this has a high, a high number, like their whatever is high. Like, this is a great company, they're doing so well. No, it's really dependent on how that company is doing compared to other companies. Because if every company is, in that sector is doing well, it's not a great company. It's just a great sector. So you also want to compare how that stock is doing compared to other stocks in the sector financially, as well as how it's doing compared to the past. So how that stock was doing in the past. So great job, Caladrone, on that. All right, let's get ahead and get rid of the stock screener. We're going to now go over our bonus material. We have today we're going over limit orders and stop loss orders. I'm going to turn this into this is kind of like a little handout I just made just really quickly tonight. I am going to turn this into like an actual legitimate PBU handout. I'm going to put a little video in there, maybe even some homework or like a little bonus quiz, and I'll make it available to everybody in Penny Boys University. I might even make it available to the free members too, because just because you're not paying for premium, I also just because you're not a part of Penny Boys University doesn't mean I don't want you to learn how to trade. Like, if it's up to me, all this would be free. But this is a company, this is a business, but I do try to make as much available, as much as I'm allowed to, free to everybody else. I do have if you go into this YouTube, you can find other free videos and free classes. I actually even have a couple free handouts. I have a trading while working 9 to 5 handout. Actually, seeing this on my computer, I can just look that up really quick for you. So trading while working 9 to 5. I have this one right here, where we go over in detail how to make a plan based off of working a 9 to 5 job, and having a risk-reward ratio and how that all works, how to track your trades, and I give you a little spreadsheet as well. that you can use as a little template of a spreadsheet. You also have a video that goes along with it explaining how all this works. So I have that available to the public in the free Discord. That is available for free members as well. It's going to be in the Discord, our free Discord. You can check it. You can go to the free alerts area, and then just look at my name. So you can just do from what the duck, and then type in trading 9 to 5, and it'll show you that post. But we also have one on the super trend indicator, which is a little fun indicator. You have these little arrows that give you buy and sell signals, and these little green and red lines which tell you if it's on an uptrend or a downtrend. Really easy and fun indicators to use. I give you some settings that you can use for those, as well as how it works, and of course a little video as well. So definitely be sure to check those out once you go into the free Discord. That's going to be at PB. It's going to be on the top right hand of the screen. It's the free Discord is at pbalerts.com/stock trading university, and you can use WTD15 to get 15% off our premium alerts at pbalerts.com. So really quickly, we are hitting the hour mark, so I'm going to do this as fast as possible. We have limit orders versus stop orders, and I will be doing some more live streams doing this exact thing. But basically, a limit order is an order that you use to buy or sell a stock at a chosen price or at a better price. So for buying, the order will only be executed at or below your limit order price. And for selling, the order will only be executed at or above your limit order price. So what this means is basically with limit orders, you're selecting a price that is better than the current price. So for buying, you're looking for a price lower than the current price is a better price. For you as a buyer, you want a lower price. And for selling, you're looking for a price higher than the current price, which is a better price. So that's for limit orders. The limit order guarantees that you will pay the price that you selected or better if your order fills, but it is not guaranteed that your order will fill. Sometimes based off of volume, or maybe the stock just does not go down to your price or up to your price. It just might not hit. So if you're worried about that, you can select market order, and it will automatically execute at the current market price, like if you're day trading a fast moving stock. Or you can use, if you're worried, or you can watch the charts, maybe use a trailing stop loss, which we will go over shortly. So example of a limit order is stock XYZ is currently at $200, but you think it's too high and it's going to go down to $180. So you feel more comfortable buying at $180. So you select a limit order for $180, and if the stock drops to that price, then you will purchase the shares at $180. That's $180. Example 2, let's say that you bought the stock at $180 and you want to sell it at $220. So you can select a limit order sell for $220. And if the stock rises to that price, then you will sell your shares at $220. So a stop loss. A stop loss is an order to buy or sell a stock when the price. Stop loss is an order to buy or sell a stock when the price is at a chosen price. The price is at, when the stock is at a chosen price. As you can see, I just whipped this up today or tonight. So stop loss order is an order to buy or sell a stock when the stock is at a chosen price. So kind of similar with the limit orders. So in buying, using a stop order, you're placing your buy price above the current price. So how does that work? Why would you want to buy a price or buy a stock for higher than it is? Who wants to buy something for higher? Well, this typically is used by short sellers. Remember how we were going over short selling before? So short sellers, borrowing a stock and then selling it immediately. Well, if the stock goes up, they had to buy it back. It's kind of like their version of a stop loss. For them, they're making sure they don't lose too much by buying back their stock when the stock goes up a certain amount. So for short sellers, they might put a stop loss. Let's just say, let's say they shorted the stock at $10. They might put a stop loss to sell at, or to buy, they might put a stop loss to buy back their shares at $10 or whatever to limit their loss. Kind of like we would when the stock goes down, they limit their loss when the stock goes up and they buy back the shares. So that's why they might do that with a stop order. And then the less common way of using this is selecting a price to buy that is above the current price. So what I mean by that is this might happen if a trader thinks that the price is going to break out if it rises above a certain price. So let's just say that a lot of stocks, when on the day, if they break through their high a day, they tend to have a breakout. Or that tends to be like the signal for traders, like, all right, it just broke its high day. Here we go. Let's go. Let's skyrocket, or rocket emojis, whatever. Or if it breaks a certain resistance point that you have, like, so maybe you think like, all right, once if this stock breaks $2.80, oh man, it's going to start moving up to the next. It's going to start moving up, but it won't do that unless it breaks $2.80. So maybe if you want to day trade it or whatever, or not, maybe you want to put in a stop buy at $2.81. So that way, if the price the price is currently at $2.60 or whatever, the price rises and then breaks that resistance or breaks the high a day, boom, you bought it, and you can ride that that breakout. When selling a stock with a stop order, this is more common, you're basically selecting to sell at a price that is below the current price. So this is to get rid of loss or to lock in gains. So example one is you bought stock XYZ at $200. The stock is dropping, and you don't want to end up being a bag holder because you're fearing that it might go down to $100 or whatever. You do not want to lose that much money. So what you can do is you set a stop loss or a stop order at $180, $180, or any price below 200, which is where the stock is at. And you do this to limit your loss or your risk, because losing is part of trading. The goal is to make sure that your losses are small. That way your wins are bigger than your losses. So, it's like, oh, I lost $2,000 this week. Well, if I made $10,000, my wins outweigh my losses. I'm up 8,000. I'm happy. I don't care that I lost 2,000. I'm up 8,000. So losses do happen, but if you don't have those losses, if you just keep holding stocks, you're gonna end up being a bag holder, and now you can't use your money because it's stuck in that bag. You can't use it to make that $8,000 to offset your losses. So, or you're gonna end up selling for an even bigger loss if you end up bag holding, then eventually just giving up and selling. So that's why we limit our losses with a stop loss. So basically, the stock's at $200, we put the stop loss at 180. That way, if the stock goes down to 180, you're stopping out, you're out. That way you don't have to worry about if it keeps going down like 160, 140, 100. You got out with limited loss. Example 2, you bought stock XYZ at $200. The stock is rising. The price is now $250. You want to keep your shares in case the stock keeps going up, but you want to make sure that in case it drops, that you are able to sell for profit. So this is basically using a stop loss to ensure that you make profit. So basically the stock's at $200. You bought the stock at $200, it went up to $250. When you think, oh, it's at $250, this is kind of a high, I think it might drop off from here, but I'm not sure. I don't want to sell yet, just in case it keeps going, but just in case it does drop, I'm going to put a stop loss at $240. That way, if the stock does decide to tank all the way down, like $230, $220, whatever, you're still making profits at $240. You're still guaranteeing those profits by putting that stop loss in there. This way, the stock begins to sell off or go down. Your order will fill to sell at $240, and you'll be walking out of that trade with profits. If you didn't have a stop loss in this situation, you could have risked the price falling all the way back down to your average or even below. Because a lot of the times when you're up, let's say you're up, $50 in the stock or whatever, a lot of the times because of emotions, because of trade psychology, a lot of the times, you see that unrealized profit, you don't do anything to protect it, and it goes down. Now it's 40, now it's 30. You're like, oh well, because you saw it at 250, you saw that profit, you're feeling a certain way, you kind of want that back. You kind of have that fear of missing out on the profit you just had, or the unrealized profit you just had. So it keeps dropping, but you're holding. I'm not going to sell. I'm not going to sell for profit because I was just at $50 profit. I want to go back there. You're starting to feel a little greedy, maybe a little anxious, maybe a little emotional, or a lot emotional. Maybe even angry at yourself or angry at the stock. So, you're holding on because you're just so stubborn. And then next thing you know, the stock goes back down to $200, and now you're at zero. So you're like, oh, cool, now I'm definitely not selling because I just had $50. All right, well, now I'm at zero. Like, what's the point of selling now? And then it goes down to 180. And you're like, well, shoot, I should have sold earlier, but now at this point, like, what's the point? And next thing you know, it's down to like 100, and you're like, oops. I made a real big mistake. I really wish I just locked in those profits at 240. At the very least, put a stop loss so that, if the order kept, if the price kept going up, because your stop loss is at 240, if it keeps going up to 260, 270, 280, you're still in the play. But on the off chance it goes down, which does happen, stocks go up and they go down, you are still making profit. So, a trailing stop loss is typically used by day traders. It's not only used by day traders, it's used by everyone. But typically used by day traders to protect their investment while at the same time making sure they aren't limiting themselves to potential upside. So kind of like what we were just saying before here with the stop loss, the trailing stop loss kind of does this for you. So basically you set your stop loss at a certain price and then you select your trail. And this can be either a dollar amount or a percentage. So you can set, you can select a stop loss and then have a 10-cent, trail, or 2% trail. I said 10 cents, as in 10 penny, or 10 cents trail, or like a 2% trail, 3% trail, whatever it may be, 5% trail. I don't know. It's up to you. Trial and error is how you figure out what works best for you as far as that goes. When the stock moves up to your selected trail, then your stop loss will move up with it. So this is kind of like, the stock's going up to 250, 260, 270. You keep moving your stop loss up as it goes up just to keep guaranteeing profit. This is kind of what the trailing stop loss does, but it does it for you. So for example, you buy a stock at $20, right? So this is where you bought the stock, $20. You set a 10-cent trailing stop loss, and you set that at $19.90. So you set a stop loss at $19.90 with a 10-cent trail, basically 10-cent trailing stop loss at $19.90. So the stock goes up 10 cents, right? So it goes up to $20.10. So now your trailing stop loss will rise with it 10 cents because the stock went up 10 cents. You hit your trailing stop, which is 10 cents. Now your stop will rise with it 10 cents. So now your trailing stop loss is $20. That's where you will stop out at $20 because it moved up 10 cents from $19.90 to $20 because the stock went up 10 cents from $20 to $20.10. And it does that because your trailing stop loss is 10 cents. That's why your trailing stop moves up with it, these 10 cents. Stock goes up another 10 cents. So now it's from 2010 to 2020. Your trailing stop will rise with it 10 cents. And so now your same thing as this. Basically, you went from $20 now. Now your stop loss is $20.10. Stock's at $20.20. All right, let's say the stock moves up. Let's just for instance, don't even read this. Let's just pretend the stock goes up 5 cents. Nothing happens because it didn't go up 10 cents. And when the stock goes up 5 cents, your stop loss is still here. And then it goes back down 5 cents, and then it goes down another 5 cents. So now the stock is at $20.15. It went down 5 cents from 2020, and now it's at 2015. But your trailing stop loss stays the same because your trailing stop is 10 cents, not 5 cents. Actually, I bold those. So basically it went down 5 cents. It doesn't affect you because your trailing stop loss is 10, not 5. Well, let's say the stock goes down another 5 cents again. So it went from 2015, now it's at 2010. Well, this is where your stop loss is, because remember your trailing stop loss went up to 2010, then nothing, no 10 cents increments happened up since then, so it didn't go up anymore, and then it went down 10 cents, so it went from 2020 to 2015 down to 2010, which is your stop loss. So now it hits your stop loss and you're out. So usually people don't do it this intensely with just a 10 cent, from a $20 to $19.90. Usually it's a little bit more. You want to give yourself a little more room, but this is just an example of how this works. So that's how that works with the with the trailing stop loss. Another example is, let's say you bought a stock at $5 and the stock is currently running and is now $8. So you're up $3 per share. You're like, I got good profit. I want to lock in that profit, but I think the stock might still go up. So I want to make sure that I still am making profit in case it goes down, but at the same time I don't want to sell right away in case it goes up. Cue your trailing stop. You can set a trailing stop to make sure if the stock drops a certain percentage or price, you'll be able to sell for great profits while making sure that the stock continues to rise, that you won't sell too early and miss out on gains. So same deal as this, basically. So is that $8? Let's say you have your trailing stop at 20 cents or whatever. It goes up 20 cents. It goes up to $8.20. Now you'll say you put your stop at $7.80 with a 20-cent increment or trail. So the stock goes up to $8.20. Now your stock goes up to $8. The stock goes up to $8.40. Now your stop is at $8.20. So the stock goes up, you're still in it. Then the stock goes down 20 cents or 10, whatever, 20 cents, yeah, and then it hits your stop loss and you're out. So basically, think of it as like it's basically like a dog on a leash, if that makes sense. We use this metaphor or analogy a lot for the Fibonacci bands, but even for like a trailing stop loss. So your stock's going up and you have a dog on a leash with you, and as you move, the dog's following you. But then if you stop and you decide to go back, the dog stays there because the dog's a well-trained dog. It stays, and you go back and then you go right up to the dog and you start petting the dog. That's the equivalent to your price going down and hitting the stop loss. So your trailing stop loss is the dog. You are the price. You know, you're walking, your dog's following you. You decide to stop and turn back around. You run right into your dog. That's basically the equivalent to you hitting your trailing stop loss. Ideally, you won't run into your dog. You know it's there, and you would pet it or whatever. You know, give it a treat or, you know, whatever. But that's that. So there are also 2 charting indicators that you can use as a manual trailing stop loss, or even a manual, just a manual stop loss in general. And that is the 2 charting indicators is the 2 charting indicators you can use as a and those are the parabolic SAR indicator and the super trend indicator. Later. So super trend indicator first, and remember we do go over these in Penny Boys University in detail. Remember I showed you that handout. Super trend indicators usually only work only during trends, hence super trend. It will not work if the stock is consolidating, like right here, because as you can see during consolidation, it gives you a lot of red and green, and then red and green, and no one has time to be stopping out and buying and stopping out and buying. What these are doing basically is super easy. These green arrows are saying, hey, buy here. We're looking like we're going to start doing an uptrend. You know, trend's reversing. And of course, you want to use other indicators, like right here, the MACD, which we go over. You can see it kind of broke out here. So that confirms this. So maybe you want to make a buy here. And then what it's telling you is when it's red, it says sell here. So in theory, you would have bought at $51. And when using this, you would have sold at like 70 bucks. That's a good trade. So that's just using one indicator. Usually you don't want to use just one indicator because, like I said, you know, here's a green arrow, but you know, it's not, but you know, using the MACD, using the, you know, other indicators, you can see that, you know, it's not necessarily a strong trend. You know, right here, you can see the MACD is under the baseline, which we go over in PBU and how, you know, how the MACD works. I'm not actually going to go over this in detail with the MACD, but basically green is buy, red is sell, but during consolidation, it can give you a bunch of signals, you know, a bunch of buy and sell signals, which can be confusing. So that's why you want to use them during uptrends to kind of determine, like, you know, like I was saying before, your stop loss. So in theory here, you know, boom, starts the uptrend. You're going to use this as your stop loss, this green line. And you're going to wait. You know, if it doesn't break the green line, then you're still in it. So, you know, as the stock moves up, you're going to move your stop up. So, you know, right now your stop's going to be at $58.65. The stock keeps going up. It didn't break your trailing stop. Now it's at $64. Another way of doing this is using the SAR indicator, which was invented by Willis Wilder, who is one of the people who we are actually going over in Penny Boys University. We're going over a bunch of the indicators that are used by Willis Wilder, like the ADX indicator, DMI, and all the other great stuff. So basically same deal. Red means sell, green means buy. You want to use these alongside other indicators, but this would basically be your trailing stop as well. So as the stock goes up, the SAR indicator, the dots go up with it. So, you know, each candle is going to give you a little dot, and this is basically telling you where you were going to put your trailing stop. So in theory, you just manually be doing your trailing stop. You have it at 58.46, 58.59, 58.86, 59.04, and you just keep manually moving it up. You can do it every, you know, you can do it every minute if you want, or, you know, maybe you want to look at the 5-minute chart. Where did that just go? If you know, let me look for a trend again. All right, here we go. Like a 5-minute chart. And it would be like, you know, every 5 minutes, you know, you would change your stop loss, you know, 134, up until here where it crosses from green to red. So in theory, you know, you'd buy here where it turns from green to red, you know, 134, and you would sell around here at like it still is not much, like 134.96, whatever. What was that big spike before I just saw? That was on the 1 minute. Oh well. Yeah, so this is how you use the SAR indicator as a trailing stop. But of course, you know, you want to use it with other indicators. You know, you can use it with the super trend. That way, you know, using them together, you can see, all right, buy here. Even though the red dots are happening, you can still see that it's still on an uptrend. So you might want to stay in it until it gets to that red sell signal right around here. Or, you know, maybe even up here, you see this big red, you know, big drop. Maybe using the MACD or whatever other indicator you see that it's reversing downwards, whatever it may be. Basically, these green dots are your trailing stop, and this is kind of how a trailing stop works. The price goes up, the stop goes up, the price goes down a little bit, it's okay. The price goes down a lot, it hits your stop, your trailing stop, well then it's telling you to sell. And now it's basically, now what happens is this is now for short sellers. This is telling you, all right, for short sellers, like, let's see a downtrend, you know, these red dots are saying, you know, let's say you short a stock here, this is where your trailing stop would be, basically, is above the price, because this is where you would buy back the price. And like right here, you might buy it back. You borrowed it here, you sold it here. Sorry, you borrowed it here and you bought it back here for less. So the green dots are trailing stop losses for bulls, and the red dots are trailing stop losses for bears, basically. And the super trend indicator can kind of help smooth out these SAR dots, or you can even just change your SAR, the settings. So that's up to you. Okay, so that is that. Like I said, I am going to be giving this little handout. I'll be making it available to the Penny Boys University members, most likely the free members as well, with its own separate video. That is our PBU live stream. Make sure to join us next Thursday, 9 p.m. Eastern Time Zone. We'll be doing this again. This time it will be live, as long as we don't have any more technical difficulties. Although this is the first time this happens, so I'm pretty sure this will not be happening again. We just switched over to a new streaming platform, but clearly it's not working, so I'm going to go back to my old one. So for next stream, it's going to be back to the way it should be. Once again, our $25 cash giveaway winners. This was done during the stream. We had Wick, CRTR, JXN, and Swifty Rick. So once again, that's Wick, WICK. We also have CRTR, JXN, and then Swifty Rick. Getting Swifty with Mr. Rick. So congratulations to you three. You won $25 each. Make sure to message me, What the Duck, on our Discord at pbalerts.com/stocktradinguniversity if you are one of our winners. That way you can collect your prize. And make sure to join me, What the Duck, next live stream. But until then, I hope that you all make some bread.